Welcome to Markets Now. I'm Michelle Rook with Shelby, Risk Management Commodities. Mostly higher day in the livestock futures, but a lower day in the grains. And Chuck, let's talk about the grains. You know, we had a pretty good rally yesterday in corn and soybeans, but took it pretty much all back today. So was it just profit taking going into the weekend, or what was going on?
Yeah, we had a pretty good run up after a really USDA report that didn't say anything. So the market saw reasons, I think, with the weather forecast. There is a ring of fire pattern developed and some really heat coming in. But we got towards the second half of the trading day on Friday, and a lot of people took their money off the table. I think there was probably a light volume aspect to it too. So wheat probably suffering from harvest pressure as we move towards the weekend. So overall, the grains didn't have a very impressive close, but had a lot of movement during the course of the week.
No doubt. And then we had the higher dollar. Was that a factor at all?
Yeah, it doesn't help anything. I mean, with our exports, we did see China come in and buy some beans. That was, certainly unexpected, but maybe that's a reflection going back on the South American crop maybe isn't as big as USDA says it is.
Yeah, I was going to ask you about those flash sales this week. Is that what it's indicating there? And, is China buying for the reserve right now? So do they need the higher quality beans from the U.S.?
Yeah, that's a factor that is not talked about much, but those heavy rains in Brazil certainly impacted the quality. And if you're a Chinese purchaser, buying low quality beans that have been damaged by, the excessive rainfall means the United States beans are quality beans, and it makes sense why they would come here and buy U.S. beans.
Yeah. So corn and soybeans, obviously, like you said, we had a good run. We got up into some chart resistance areas too that we couldn't take out again, right?
I think the markets needs more information. Crop ratings are still high. It is early on in the growing season, so the crop can handle some stress here. If it's 30 days from now and we're out in July and it's this hot, pollination's going on, then that changes the ballgame. But I think the market saw the potential heat stress on the crop, but again, not enough information for it to break out to make new highs.
You bet. So we are going into, like you said, weather will be one factor, but we're also going into the end of the month, end of the quarter, and we've got these big reports coming up. How volatile could it get?
It could get pretty extremely volatile because the acreage report is going to be real interesting. Will we cut out 500,000 acres? That certainly impacts things. On the soybean side, would you add 500,000 acres? Those are two major factors going on. We have, quarterly grain stocks, information there to really show us how much we have left over. And then as we approach the end of the month, we're going to be right into the 4th of July holiday, which is a lot of times in the market that is kind of a make or break time based on the forecast. Does it rain or does it rain? So a lot of things going on, whether you're bullish or bearish at this point in time.
So what is your thought about acreage? Did we swing some acres from corn over to soybeans or not? Or from soybeans over to corn?
I believe early on it looked like producers were going to get all the corn planted, and maybe they might have planted a little bit more. But I think with the wetness that occurred, I certainly believe, talking to the farmers, that there has been some switching away from the corn to beans. It certainly was a struggle in many areas to get done. I know there's farmers in southern Illinois and Indiana that still aren't done planting as of today. So I believe the corn acres will shrink back some. On the other hand, I do believe that probably means an increase in bean acres.
And do we need that increase in bean acres with the 455 million bushel new crop ending stocks figure?
Not really. So that goes back to the question of what's the yield going to be. Right now, USDA running a 52 bushel yield. With late planted beans, usually your earlier planted beans are your higher yielding beans. So I think at this point, positive in the long run would be, yeah, we got more acres, but 52 type yield seems probably a little bit of a stretch for kind of weather we've had and the lateness of the planting of the beans also.
We will see. We mentioned in a month and a quarter. We didn't mention the fact that we're going into delivery period here pretty soon. Are we going to see the debacle that we saw the end of February going into March or not?
Not as bad. I think a lot of producers have cashed in on some of the rallies we've had. I think some of the guys will roll to the September, but I think a fair amount of producers have made some decisions here and let the crop go. But it will probably be a factor as we move into the next week or two. So producers will have to make a decision again, but I think there's a lot less of them to have to worry about that than we had back in February.
Nice day in the cattle on Friday. We had some record highs as far as cash trade in the north and new highs for the move in the future. So can we keep going?
Well, they keep talking about will the consumer, reject these higher beef prices, but so far they've been able to handle it or want to. We're in that prime summer cookout season, so it seems to me that cattle continue to be well supported. Consumers again not rejecting these prices. As a producer, it might be still worthy of some kind of option strategy to put a floor underneath here in case something happens that we don't know about. But so far, it looks good. It's going to take a while to rebuild the herd. And at this point in time, it just looks like throughout the summer months anyway, the cattle market's going to be well supported.
Okay, as long as we can get rid of a lot of these bird flu headlines, it seems like we get 2 steps forward and take 1 step back every time we have that.
Yeah, and the market had to absorb that, and after a while, I think it becomes somewhat of old news. But it's certainly still out there, and if something major happened, that would be another negative factor. That's why I was suggesting maybe some, inexpensive put options to make sure there's no reason that this market has a big sell-off like the hogs have.
So let's talk about hogs. Are consumers trading down from beef to pork, or do we have any evidence of that? Because right now, when you look at cash and cutout levels, they've been pretty stuck. Has that been the reason the futures have been down at these levels, or what?
Yeah, it's kind of interesting. The consumer hasn't really jumped on the chicken and pork bandwagon. So it seems like with a big break in the market, we should find support here going forward. Again, it's a much cheaper cut, but I know a lot of restaurants are featuring pork. So hopefully we've done enough damage here to the pork prices, and we'll see some kind of recovery as we move into the deep summer months.
Yeah, you got to believe the funds are getting close to being flat here, don't you? I mean, is that kind of the indication that we'll be able to put that low in when they've done that?
Yeah, they've made a massive adjustment in their positions. We've gone all the way back down to where the January lows are before the rally occurred. So as we look ahead, the funds once they're out, they're out. I don't think at this point they would, continue to pile on and go, to the short side of the market. But we should find a base here, and the market should have the ability to get some kind of recovery going.
Let's hope the low is in. Thanks, Chuck. Chuck Shelby with Risk Management Commodities. That's Markets Now.